Hi, my name is Kevin Retcher. I'm the owner of First Meridian Mortgage. We came down here to look at the Washington Monument. I'm at the Jefferson Memorial, and we're down here checking out the cherry blossoms. It's that time of the year. They're like 2 days from full bloom, so I thought it'd be interesting for everyone to get to check it out. So Michelle's going to ask me a few mortgage questions, and I'm going to rattle off answers as quickly as I can.
All right, what is a mortgage?
Mortgage is a lien against your property where you go to the bank and get a mortgage, and they record that lien in the land records to show who is the actual owner of the property and who actually has rights to the property. So if for some reason you didn't make your payments, it's the mechanism of which they're allowed to foreclose on. I went to ChatGPT and asked it 50 mortgage questions, and ChatGPT says, a mortgage is a loan from a bank, financial institution that helps you buy a property. The property you choose is the collateral, meaning a lender can take it back if you don't make the payments. Pay, you stay. If you don't, you go. That is the old mortgage adage. Mortgages come with a specific term, including interest rate and duration. So you can, and they can be a random amount of time. Go ahead.
How do I know if I qualify for a mortgage?
Interesting question there. So you're going to want to speak with a loan officer. He's going to go over your last 2-year work history, your income, what the collateral is going to be, what your debt to income ratios are. So they're going to make sure that you can afford the payments after your bills are paid. And they're also going to look at your credit worthiness in relation to debt to income and also your employment history.
What is the difference between fixed rate and adjustable rate mortgages?
Fixed rate has a set mortgage payment for the entire term of the loan. So if you do a 30-year mortgage, your payment will never change. A adjustable rate mortgage will have a fixed period of time of which your loan is fixed and your payment is fixed. For a specific period of time. It could be 3, 5, 7, 10 years. And then it will adjust to whatever the terms are. Typically, they have caps on what the adjustments can be. And they're typically 2 and 5. So it could go up 2% when the adjustment comes, or sometimes as much as 5%. So you have to be ready for that adjustment on adjustable rate mortgage. The advantage of adjustable rate mortgage is that it typically has a lower start rate, so you can afford the home and grow into your payment.
What is a good interest rate on a mortgage?
A good interest rate is going to be indicated by your credit score more often than not, and debt to income ratio. So rates change all the time. So in general, a good interest rate is going to be, the top tier is going to be someone with a 780 credit score. And if they, depending on how much money they put down, from 3 to 40%, there's different levels. There's 3, 5, 10, 20%, and 40% brackets. So the best interest rate you can possibly get is if you have a 780 credit score with 40% down.
How much of a down payment do I need?
Down payments can be tricky. They often range from 0% down on a VA USDA loan, 3.5% on an FHA, 3% on conventional, 5%, 10, or 20. The more you put down, the lower your interest rate. So if you can save up money, anyone with 3% to 5% can typically afford to buy a house.
What are points on a mortgage, and should I pay them?
There are times that you should pay them, and most of the time I'm of a belief that you shouldn't. If a seller's paying those for you, then that could be of an advantage. Points actually buy down the interest rate by paying the bank interest up front. And by doing so, they offer you a lower interest rate for the term of the loan. So if a seller's paying for that, why not take the lower rate? They are tax deductible in the first year on a purchase, and you could take, if it's a 30-year refi, you could take 1/30 of that on as a tax break. But An example on a conventional loan is a point normally would get you a 1/4% lower rate. On a government loan, it's typically about 3/8 of a lower rate. So if you're trying to get into a home and have a little bit lower payment, a discount point can save you over the life of the loan. But you have to ask yourself if you think you're ever going to refinance, and what is that time frame? If you refinance in too short of a period of time, you'll never recoup the money that you spent up front. If you're going for a builder deal, sometimes they give large seller concessions, and it could make some sense to pay points at that point, simply because they're paying the money for you.
What is mortgage insurance and when is it required?
What is mortgage insurance? Mortgage insurance is typically required if you put less than 20% down, and it guarantees the bank, if you go into default, that they will get reimbursed up to 20% of that equity position, so they don't take a major loss. VA loans, USDA loans are 100% financing, and they have basically a guarantee for the bank to go ahead and buy the loan, so the VA protects the lender in that situation. So you can get 100% financing and not pay mortgage insurance. On FHA, it's typically 3%, and you give the FHA a 1 3/4 upfront mortgage insurance premium, and then there's also a monthly amount, 0.85%, goes to, on a monthly basis, pays the mortgage insurance. Just in case you default, FHA will reimburse the bank up to that 20% level. On conventional loans, mortgage insurance is a monthly amount, or you can pay for a single premium. But regardless, if you put less than 20% down, there is a percentage of monies that go to pay mortgage insurance just in case you default. If you have 780 credit score, mortgage insurance is not that expensive these days. And the lower you go down on your credit score, the more expensive mortgage insurance would be.
What are the steps in the mortgage application process?
The steps in the mortgage application process are pretty simple. You're typically going to want to find a mortgage loan officer, get a referral from a family member, look at reviews online, find someone local. I highly recommend a local loan officer. You can contact a bank or a credit union also. If you're working with a realtor, they often will have someone they can refer you to. I often say go to a local loan officer that has good reviews. Basically, they probably work with a lot of agents. I myself have over 500 agents in my database. So if you go to a loan officer and get pre-qualified, then he might have some recommendations for a realtor.
How long does it take to get approved for a mortgage?
How long does it take to get approved for a mortgage? Can be as quick as 15 minutes if you're prepared. If you have all your documents in a row, your W-2s for the last 2 years, 1 month of pay stubs, 60 days worth of bank statements, photo ID, contact a loan officer, go ahead and do an online or a verbal application, and with one of the systems I have, I can actually have a pre-approval. After I've taken your loan application, which is about 20 minutes, I literally could have a lender approval within as short a time as 15 minutes. Now, that is not the norm. In most cases, a day or two is the average time frame to get properly pre-qualified for a mortgage, and then you could go house hunting.
Can I negotiate mortgage rates?
Absolutely. One of the best things that you can do for yourself is to understand how to negotiate mortgage rates. One of the easiest things to do is to call a mortgage broker. There's more truth in lending and dealing with a mortgage broker because they have to disclose how much money they would make doing a loan. If you go to a lender, a credit union, or a thrift savings, they actually do not have to disclose how much money you make. A very simple way to negotiate interest rates is to go to mortgagematchup.com. You can punch in your zip code and actually get a list of lenders who are mortgage brokers tied to United Wholesale Mortgage. If you do that and you ask one question to each of those loan officers, that question is, what is your lender paid compensation with United Wholesale Mortgage? And if you write down that percentage, whoever has the lowest percentage is probably automatically going to have the lowest interest rate. But the other thing that you can do is ask for a loan estimate from each of those. If you do go to a bank, a credit union, or a thrift savings, you can compare that to a mortgage broker. You want to compare what the points are, what the interest rate is, and what the lender admin, underwriting, or processing fee might be. Those are the only fees that loan officers truly do have control over. And if you narrow those down, you can get yourself the best interest rate.
What was it?
How much
house can I afford?
How much house can you afford does depend on a number of certain factors. One of those factors is what is your gross income per month and what is your credit score. So, and then what they do is it's called debt to income ratio. Most lenders will allow you to have your total debt for a month that's on your credit report plus housing to equal 45 to 50% of your gross monthly take home. So to round that out, if you made $10,000 a month and you used 45% of your gross, that would be roughly $4,500. If you ended up taking off all your car payments, student loans, credit card debts from on a monthly basis, what the minimum payments are from the $4,500, let's say it was $1,000 in monthly car payments, student loans, and credit card debt. That would allow you $3,500 to go toward your housing cost. Then you have to back out what your actual payment for the taxes, insurance, mortgage insurance, and any HOA from there, and then we can back into exactly what how much house you can afford based on interest rates at that time. So it does fluctuate with interest rates. Lower the interest rate, the more the buying power you have.
What are closing costs and how much should I expect to pay?
What are closing costs? Closing costs are the one-time transactional fees that are associated with buying a home. Typically there's an underwriting fee, appraisal, credit report. The title company is going to have lender's title insurance, typically a title search, a binder, CPL. Then you're going to have a state recordation. Then you have all your home inspections, radon, survey, those are optional items, owner's title insurance, just to name a few. If you're on a well, you might have a well and septic inspection. All of those get grouped into closing costs. They typically average about 2 to 3%. So if you want to find out or think about how much money you're going to need to buy a house, if you're putting 5% down, if you actually save an extra 3, you're going to probably be okay with having 8% to buy a house. The other thing about it is closing costs are one-time transactional fees. Often you can get the seller to contribute toward those or negotiate that into your contract and mitigate some of those closing costs.
What is a pre-approval and why do I need one?
Pre-approvals and pre-qualifications are two different things, but they can be the same or they can be different. Depends if you're doing business with a mortgage broker or a lender. Lenders will use the word approval because they actually lend the money. A mortgage broker typically will go with a pre-qualification to start with, and then they'll switch it over to a pre-approval depending on your needs. A pre-qualification is like having all your ducks in a row so that when you go out and go house hunting and you get under contract that you've already been pre-qualified or pre-approved. Both of them set you up for success in buying a home. The one thing with a pre-qualification is that for a mortgage broker in Virginia, they can only use the word pre-qualification if, in fact, they have not gotten you approved with a lender. Once you're approved with a lender, they can use that term. Now, quite often with lenders, they'll use the word approval, and real estate agents love that word. But what typically happens is you have to ask yourself, have I given them the documentation? Have I given them my W-2s, my pay stubs, and all of the material to actually give me a pre-approval? If you haven't, then that pre-approval is probably worthless, unless they've done 1 day certainty. Other than that, if you haven't given them the disclosures, you might want to ask them whether or not you need to have a true pre-approval. With a mortgage broker such as myself, I never write a lender letter unless you've been given me all your documentation and I've gotten the pre-approval through the automated underwriting engines to give you the certainty. I myself, in 27 years, have never missed a closing date in my life because I do the work up front. That's the most important thing. Have they done the work?
Should I get a mortgage from a bank or a mortgage broker?
Should you get a mortgage from a bank or a mortgage broker? I am a little bit biased because I am a mortgage broker. I do feel that there's more truth in lending and dealing with a mortgage broker simply because we do disclose how much money we make on a loan. And that is very important, that you have certainty and understanding of your cost. Lenders do not have to disclose what they make on a loan, and sometimes they can give you one deal and give someone else a different deal. With a mortgage broker, we're locked into our lender paid we're locked into what we're allowed to make on our lender paid transactions.
How does my credit score affect my mortgage rate?
Wow, good question. How does my credit score affect my mortgage rate? Great credit is 780, 760, 740, 720, 700, 680, 660. So the lower your credit score, essentially you're going to have a higher interest rate due to loan level price adjustments. It'll also dramatically affect mortgage insurance. The higher the credit score, mortgage insurance is not that expensive. Lower the credit score, it progressively gets more expensive for every 20 points lower on your credit score.
Can I buy a home with bad credit?
There are programs out there that would allow you to buy a home. FHA does allow credit scores as low as 500. Technically, VA loans do not have a credit score adjustment, so those programs would be available to you.
What financial documents do I need to apply for a mortgage?
Oh, great question. What financial documents do you need to apply for a mortgage? You need your last 2 years W-2s if you're salaried, 30 days pay stubs, 60 days worth of bank statements, copy of your photo ID. If you have any businesses, Schedule C, 1099 income, or any Schedule E's, if you own any rental properties, you would need your last 2 years tax returns. If you are self-employed or you own 25% of any business and or partnership, you would then need also business tax returns to include your personal tax returns.
How do I choose the right loan type for me?
Typically, I would say that most people should stick with a 30-year fixed mortgage. The ARMs, since the 2007 mortgage crisis, the typical ARMs out there now are fixed for 7 or 10 years. Those are adequate if you have a short time frame, and the 7 years if you're going to move, for example, before the 7 years is up. But most people should stick with a fixed mortgage.
What is an escrow account and how does it work?
Think of an escrow account as your savings account for your taxes and your insurance, which typically are either semi-annual bills or annual bills. And they can be quite large. On a $600,000 house in this area, you might have a $5,000 tax bill, and not everyone has that just laying around to pay. So what they do is they allow you to pay 1/12 of that into an escrow account. They save that money, and then they make that payment for you annually so you don't have a surprise. Same for your insurance. They do the same thing for your insurance bill, which can be from $1,000 to $2,000. So if you have 1/12 of that broken up into your payments, it's much more manageable. So think of it as a savings account for your mortgage.
Can I use gift funds for my down payment?
Absolutely. Almost every mortgage program out there will allow a allowable gift from a family member. They do have to be documented with a gift letter, a bank statement from the giftor, proof that the money left that specific account into your account. then you would give me a snapshot showing the money came in, and you would be able to use that money. You can use gift funds on VA loan, FHA loan, and all conventional loans.
How do I start the home buying process?
Typically, I would say that you're going to want to locate a loan officer in your local area. You can use mortgagematchup.com, type in a zip code, and that would give you mortgage brokers that are licensed in your area with your zip code. You can also check with family members that have bought a house and also real estate agents. They may have a good referral for you. That's the easiest way to find a loan officer. What should you look for in viewing homes? One of the things online that I suggest for people when they're looking at homes like on Zillow and listings, I tend to tell people go to the very back of the photos, the very last photo. Typically, and I work forward. Look in the mirrors, look in the windows to try to see what the real estate agent may or may not be showing you in the pictures. The other items that you are looking for in a home, you should make a checklist. How many bedrooms are you looking for? How many bathrooms? What kind of space do you need for your family? Is your family growing? Are you planning for that occurrence? Sit down, talk to, if you're buying a house with someone else, what are their wants and needs? What are the must-haves and like-to-haves? Give that list to your real estate agent, and they can work with you to try to find the perfect home for you. That again.
How many homes should I view before making an offer?
How many homes should you view before you make an offer? I would say at least one, if not as many as you feel you need to find the perfect home. Often, I as a real estate agent have shown someone 2 homes and they bought the first one that they've shown, that I showed them. That is rare, and as an agent, you really want them to see more homes. You want to have a good idea of what is available in the marketplace. That way it helps you understand pricing on individual houses also. So there's not an exact number, but typically I would say anywhere from 5 to 15 is probably a good amount, maybe over a 2 or 3 week period. But if you find the right home, you should jump on it as quickly as possible. What is the role of a real estate agent buying a home? I feel personally that everyone should have a real estate agent. I've bought 7 homes in my career. There was at least one mistake made on each one of those, but they were typically minor, but they were different on every one of those. A real estate agent that's done 20, 40, 200 transactions has seen a lot in their career, and they can provide the expertise that you need to make sure that the house that you're looking at is quality and will suit your needs. They have, it's another set of eyes, and typically I always say that you are hiring the real estate agent. Keep that in mind. If you start down that path and the real estate agent just doesn't seem a right fit for you, go ahead and just tell them that you'd like to move on and find another real estate agent to suit your needs. Keep in mind, this is one of the largest purchases you're going to make in your life, so you want the best team around you, the best loan officer and the best real estate agent that can work cohesively to save you money and not make a mistake.
How do I make an offer on a home?
How do you make an offer on a home? Typically, you're going to work with a real estate agent. Typically, you're going to sign a buyer's broker agreement, exclusive right for them to represent you. They're going to then, in turn, show you a number of homes. Once you find a home that you like, that real estate agent will walk you through the contract process in putting in an offer. Their expertise is going to guide you through all those questions from home inspections, making an offer, what type of contingencies is warranted in the current environment. Sometimes there's a buyer's market, sometimes there's a seller's market, so each market can be different. They're going to guide you through that process.
What happens if there are multiple offers on a house I want?
What happens if there's multiple offers on the house that you want? Typically, in this day and age, the listing agent's going to get with the top 2 offers, and they're going to try to get the seller the best deal possible. In many cases, they may let the buyer's agent know that if you tweak the price or tweak an inspection or a contingency, that may put you into the first slot versus the second slot. So you want an agent that has good negotiation skills and is ready and willing to take that phone call at a moment's notice from the listing agent to make sure that you're top of mind.
How does the home inspection process work?
The home inspection process, typically the real estate agent's going to have a home inspector that they like to use. They'll schedule that. Typically you'll need to make the payment before or before they send you the final copy of the home inspection. The average home inspector should take about 3 hours on a home, probably 2 hours on a 2.5 hours on a townhouse, and probably 2 hours on a condo, checking every outlet, checking every window, going over all the mechanics of the home, and give you a good synopsis and report on the house. They're going to find some things. Keep in mind, typically you're not buying a brand new home, so keep in mind that some of these things may or may not be deal breakers for you. You have to kind of weigh and choose what ones you want maybe asked to be fixed, or maybe it's just walk away because it's more than you want to take on as a homeowner.
What happens at a home closing?
What happens at a home closing? Typically, most of the time you're going to have your walkthrough on the home either the night before or in the morning of. I prefer the morning of because keep in mind if you have your final walkthrough on a home at 5 o'clock in the evening and a pipe bust at 8 o'clock in the evening, and the next morning you haven't checked on that house and you go to the closing and the house is being flooded while you're at closing, you don't know that there's a problem. So typically I would always say get your home inspection the day of and then go straight to the closing. The average closing, depending on how much you read, is going to take about 30 minutes to 45 minutes. Keep in mind these documents you really can't change. These are standard Fannie Freddie mortgage documents. Everyone signs pretty much the same thing. So there's really just having a basic understanding of your numbers, go through the documents. The settlement agent should be able to walk you through all of those particular questions. The other thing to keep in mind, you're always going to need certified funds at closing. I recommend wiring the money in advance so you don't have to worry about that. And I also recommend don't try to get it down to the exact number. I would tell you, like if you had to bring $25,460, wire $22,000 if you can, and the settlement company will just cut you back a check for the difference. This way you don't have to worry about getting exactly the right amount of money. If you are going to get a certified check, you're going to have to go to a bank, take the time off of work to potentially go do that, get a certified check and bring that to the closing table. Again, I would probably go a little bit higher just to make your life easy.
How long does it take to buy a house?
The average time to buy a house is probably predicated on how many houses you need to see until you find the right one. Once you find the right one and are fortunate enough to win a contract, typically the average close time we like as loan officers to typically be around 30 days. But they can be as short as 14 days, in some cases as long as 60. If you go much beyond 60, I would tell you that locking for that amount of time is going to cost you more money. I would probably wait till you're within 30 to 45 days to actually lock the loan. But you can get a safe time frame, 21 to 30 days for the loan process, hopefully 20 to 30 days to find the right house and get under contract.
What is a home appraisal and why is it important?
Home appraisal is for the lenders to review the collateral. The lender doesn't get a chance to go out and see the house that you're looking at. So the appraisal is going to give at least 3 comparables of loans that closed in the last 6 months within a 1-mile radius of that house. It's also going to give typically 2 comparables of listings that are active. to give the bank an idea of what the market is in that area and what the true value of a similar home, similar size, similar type of home is in the marketplace. That is the collateral that the bank's lending on, so that's what they take back if you don't make those payments. So in the end, they want to make sure that they have a good synopsis and appraisal of that house.
Can I buy a home while selling my current one?
Can I buy a home while selling my current one? Most real estate agents are going to, first thing that they're going to say is, do you have to? Yes, you can. Don't let an agent tell you that you have to be able to buy the next house non-contingent and have 2 mortgages. If you want to sell that house, then find an agent that's willing to sell that house and close either the same day or close on that a day or 2 before the next settlement. The other thing that you can do is sell your house and do a rent back and live in the house and try to find that house and get under contract and buy the next house within 30 to 60 days typically. The other thing that you do have to do is move in to the new house within 60 days, so keep that in mind. Otherwise it would become an investment property and you'd be out of compliance. So you absolutely can sell your house and buy contingent on selling of that house and buy the new house.
What are the benefits of buying a foreclosed home?
One of the benefits of buying a foreclosed home is often you hope that you're getting a better price. One thing, keep in mind, you're going to want to have a good appraisal and a good idea of the value of that house before you go into that. Hopefully you can also see the house beforehand. There are people that will buy a house sight unseen in a foreclosure process. Keep in mind that you're usually typically dealing with a bank, and they go a little bit slower in the process of taking in contracts and approving those contracts. So it's going to be a little bit longer road. You can do it. Keep in mind that it's not as quick of a sale as you would if you were just dealing with a typical seller.
What are the pros and cons of buying a fixer-upper?
The pros and cons of buying a fixer-upper is, if you're a handyman, I would tell you that you can get some sweat equity and typically buy a house under its appraised value, fix it up, and then either live in it and have that sweat equity and enjoy the home and fix it up the way you want, or you can then flip it and typically make some money. It just depends on how you want to do that. A lot of it depends on the amount of cash that you have available to actually do the fixing. And the other item to keep in mind is, are these things that you are actually good at doing? It is a learning stage being a homeowner, and hopefully you have some of those skills if you're going to buy a fixer-upper. Otherwise, you're going to be relying on contractors to do the work, and you're going to want to try to oversee what they're doing and making sure they do a good job.
What should I know about buying a home in a flood zone or an earthquake area?
One of the biggest things that you should understand with buying in a flood zone is you can get flood insurance through the National Flood Insurance Program. It is ran by the government. The maximum they allow is $250,000 of dwelling coverage and $100,000 in personal property. If a house has already been in a flood zone and it has flooded before, that cost of that flood insurance is typically going to be more expensive. Also, you want to read your homeowner's insurance documents to see whether or not earthquakes and flood are excluded. Flood usually always is excluded. Earthquakes can be excluded and or have a higher deductible, so you might want to keep that in mind.